when you get paid from work, there's PAYE, pay as you earn. I've heard that sometimes your employer might not pay the correct amount and you might be liable. Now, how do you make sure that as an employee you are paying the correct, or your employer is paying the correct percentage monthly?
Okay, so here what's important is for you to check your pay slip, and then you're gonna need to kind of do a little bit of a tax calculation. But to simplify it, what you can do is look at your full amount that you earn from your employer for the full annual amount, and then try to work out your tax contribution or your tax liability for that year. Also take out the tax rebates, use your tax tables, they're always published on the SARS website. So try to calculate the amount of tax you should be paying annually, because it's always an annual amount, the liability. But what pay as you earn does is it's basically the employer holding the money, withholding the money and paying it over to SARS on a monthly basis, just so that you don't get overwhelmed by this annual debt that you have to SARS. So do your calculation, see the annual amount and just divide it by 12. And then kind of see if the amount that your employer is withholding is around the ballpark with that amount. And if it's not, then you can query it with your HR department. Ask, why are you withholding so much? Why are you withholding so little? Because you don't want to come tax season, when you're filing, you have this huge liability to pay because they were not withholding enough. It might be nice, I have a higher net income because they're withholding little money, but it's going to bite you at the end when you have to now pay back that money. So you really need to be diligent when you're looking at your pay slip and just do that calculation. And once you have the amount once off, then you can just check on a monthly if they're withholding enough.
Okay, all right. So it's not all about your employer. You need to sort of take responsibility to make sure that you're doing the right thing.
Yeah, because when it comes to tax, a lot of us, I've heard someone say, "Hi, mina ngingena pikteni bakhokhile or not." It's your liability. Your employer is doing you a favor by withholding the money or paying over the money to SARS, so that it doesn't overwhelm you when it's tax season. So you do need to keep a handle on how is that liability doing, because it is in your name, it's yours. The company is just administering it on your behalf. I think that's one thing that people think, employers are responsible for PAYE. No, it's still yours. So you need to keep an eye on that.
Okay. Another question done on tax now. The next question that we were asked was about the 50-30-20 rule. Can you just explain it a bit so that the viewer can understand?
Okay. So the 50-30-20 rule is basically all about how you allocate your money. So we've mentioned that you're going to get your salary, so now you need to allocate it. So it's just a way to better manage your money. So you can say, okay, 50% of it will go to my needs, like I need groceries, I need to pay for my rent or the house, water, electricity. So 50% of it is your needs, and then 30% are your wants. Like, I would love to do my hair, I'd like to do my nails. So that all goes on the 30%, and then the 20% is now your saving and investment. So this is now you putting money away, whether you are saving it for retirement or saving it for your child's education or saving it for a holiday that you want to go on next year, because we don't only save long term, but there's also like shorter term, or you're just saving to buy something on Black Friday, whatever it is that you want to save for. So those are that's just a percentage allocation that people have found to be effective in terms of managing your money, because you don't want to find that 90% of your income goes to needs. Now you have so little or no room for saving, no room for wants, and then you just see that Uncle happy bank because I'm not exercising, I'm not acting on my wants, you know. So it's important to just sit down and just look at maybe your bank statement or your budget. It's important to budget. This is basically a high level budget. It's okay, 50% is this, 30 is this, and 20 is that. So sit back, look at your budget and try to classify and see what percentages you come with, because you don't want to find that 70% of your income goes to your wants, and then non-enjoyment. Everything is non-enjoyment, and nothing for your needs, nothing for investing, nothing for saving. So it's really a nice way to kind of see where you are and try to attain that percentage split.
So it's basically receiving your money and telling your money where to go.
Instead of wondering, hey,
Where did it go?
yeah,
Okay.
definitely.
All right. Thanks for that clarity. I hope you have been answered, viewer that asked that question. So one of our viewers was in a business with a partner, and they went their separate ways for their own reasons. And what the partner did was took the business card and incurred debt on that.
Yeah.
Fortunately, she didn't have to pay. Like after investigations, it was discovered that, okay, it's not your debt. This one will pay the debt. However, she wants to understand how is that going to affect her credit score.
Okay. So if the debt is in her name, then there's nothing that can be done unless you can get whichever credit provider that is to like remove that debt, because now the investigation has been closed up. Then you can go, okay, remove it. But if it's there, it's there, because that's the thing. When it comes to business, it's so important to kind of look at what incorporation you do. Do you do something like a partnership, or do you do a company? A company is safe because at least everything is not in your name. It's in the company's name. So the company would be responsible if now this was in the company. So I would say for someone else who's at home, so that to avoid such things, just incorporate a separate legal body, because you don't want to find yourself responsible for the debts of the business, whether it's the business incurring losses or being sued by someone else, or in jail, it's no longer profitable, and then now you have to fork from your own personal money. You need to separate the two. That's why it's so important when it comes to personal finances. Whatever side hustle that you have, try to legalize it, formalize it, make a little company. It's very simple and it doesn't cost a lot of money to register a company, so that your business can function on its own, and whatever expenses are incurred in the company will stay in that company, and it doesn't have to affect you personally. And it's also obviously important to look at the people that we get into business with. Someone that you can trust, someone that will respect you and your name as well. But then obviously a lot of things can happen as time goes on. That's why I'm just saying, just make sure that you get the legalities in place when it comes to business, because you don't want to find yourself jointly liable with someone on something that you didn't even have a part in incurring. Yeah.
And how difficult is it to draw up that legal document that will make sure that you are separate from that person or that business, or the debts that are incurred by the person or the business?
Yeah. So usually when you already are in a company structure, then it's simple. The company always transacts, but it's also important to know who do you authorize to transact on behalf of the company, because you can't have one director going and incurring all the expenses. So I would say have maybe joint signatories, and maybe so that no one can just incur expenses on their own. There's always someone who's also co-authorizing those transactions. So I think that's what's key. So when you do register a company, it's simple. The CIPC has different like MOUs and different documents that are already pre-done. So you don't have to now get a lawyer and draft new documents to separate yourself from the company and all of that. It's already done. There's documents that are pre-done, but if you also want to update them and have your own, you can get a lawyer to help you draft that.
Okay. Thank you for that. I hope you've been answered. And even if, apart from the lady that asked the question, anyone else that's in a partnership currently that intends on engaging in a partnership, I think this is very important to protect yourself, to protect your name and your credit record. Yeah. Moving on to the shopping bracket of our section. So people wanted to know about specials. So we know about Black Friday. We know that there's the festive season comes with a lot of shopping. Valentine's Day, different seasons have that. Even on a monthly basis, retailers always say sale, special, all of that stuff. So what should one do or not do to make sure that they're not, duped into thinking that they're saving money when in reality they're going to spend way more than they would have spent had they not been offered these options?
Okay, yeah. So what's important to know is that retail companies have been in business for long. They've studied our behavior and they know what works. So when it comes to specials, you need to, I always say, write it down, write down. So you need to know what it is that you want, how much do you have budgeted to spend, or how much are you willing to spend it, and also look at what is the normal price, not just from one retailer, but from multiple retailers. Do some price comparisons, and then you can kind of see, okay, no, it's too much there, or it's a lot there, or this is really a bargain. And then when you do go out now to do your shopping, make sure that you've done all of this so that when you go out, you stick to it. So stick to, this is the budgeted amount. Oh, wow, now I'm spending less. Good. Then you spend that. But don't now go over and above what you'd budgeted, and don't now buy the one that says save this much from a false high price that never existed. So it's important to do a bit of research. Sometimes it can be a bit daunting because now it's like delaying it, and they'll always make it as if, while stocks last, today only, all of that. So sometimes you can forfeit it or forego it if you don't see the immediate benefit, but just see the benefit. And I would always say stick to your budget. If it's still, because you can't just buy something that you didn't plan to, because that's where now you're going to get to that, oh, what happened to my money, instead of knowing exactly what you're sending your money to do. So always have a list of wants that you're willing to get at some point, so that if something comes up, then you go for it. But not that you're just walking and then a shoe speaks to you, but you never had any intention of buying a shoe. Maybe you just need a jacket for winter, then now you're buying a shoe that you don't need. So always write things down, the budget and what you need and how much you're willing to spend.
You need to speak back to that shoe with your budget. To do that, you need to have a budget.
Yeah,
so I think
definitely.
Your budget is very important. Can we speak to that, the importance of a budget?
Yeah. So a budget is so important because now it's putting a plan in place for your money. It's no longer just getting your money and then wondering what happened at the end of the month when you don't have enough to get you to payday. But it's allocating your money, saying, I'm paying this much for that, this much for that. Then you can see whether you have a net surplus or a net loss. And if you're in a loss position, how are you going to fund that? Are you going to fund it from previous savings that you've had before? Or are you going to fund it from debt? You're going to use a credit card or an overdraft? Because you need to be aware of that. And if that's your plan, then how are you going to get out of that going forward? And also, if you do see that you are in a net loss position, what can you do to improve that? Can you maybe try to increase your income, have a side hustle, try to increase your income, whether it's speaking, having that difficult conversation with your manager of, I need a raise, and maybe looking for a new job if you feel like you could add value somewhere else and get a higher and get a higher pay. And also, sometimes it's not like our income that's the issue, it's our spending. Yeah. Look at your expenses, your spending habits. Do you think maybe you could spend a little bit less on, I don't know, coffee on your way to work, or spend a little less on data? Some of us, like, we don't care whether you are going somewhere, you just want to spend data, you want to buy takeaways, you want to spend too much. So see if there's certain ways that you can cut back. So a budget helps you see what's your issue. Is it an income issue, or is it an expenses issue, or is it a discipline issue? It just helps. It's like holding a mirror up. It helps you see where exactly the issues are. So I'd say start with your budget, and if you still are not sure, just use that 50-30-20 method that we discussed. Allocate your money accordingly, and then see what percentages are coming out, and then also see what's the ideal, and then see how you can adjust to get to those percentages, just so that you have something to work towards.
Okay. Thank you so much.
All right.
With that said, we have reached the end. Is there anything else that you'd like our viewers to know before we conclude?
Okay. So I would say personal finances are very personal. There's no one blanket approach, but just make sure that you are informed and don't take decisions that you are not too sure about. If you're unsure, always consult with someone, have a discussion. And if you want to get in touch with me, you can also email me on info@momandall.com, or drop by on my YouTube channel, Sinikiwe Ngcobo, and then we can basically discuss what issues that you're facing, so that you don't find that you are alone, these things that you don't know, whereas you can easily find the information online. All right. yeah, so those are my closing remarks.
Thank you very much. That was Sinikiwe Ngcobo, financial wellness speaker and coach. We'll leave all her contacts, email, Instagram, YouTube down below in the description. Thank you so much for
Thank you
your
for
time and
having me,
information.
Katlego. This was fun.
Yes, it was.
Yeah.
Thank you so much for watching, guys. If you learned anything here, please share with others so that we can spread this financial knowledge, wisdom, or wellness with others. Be sure to click the like button if you haven't and you have enjoyed this. Subscribe for more useful content and leave a comment with your question and what it is that you have learned from this episode. Thank you. Until next time. Bye for now.
Bye.
Thank you for joining us on Financial Success with Sinikiwe Ngcobo. I'm curious to know which other topics you'd like me to cover on this channel, so please let me know in the comments below. Remember to subscribe to my channel as well as to Sinikiwe's channel.